JM Financial India conference. Well, the first day kicked off today and we spoke to PDS Limited Group's CEO Sanjay Jain on retail trends, Q2 earnings and more. Listen in.
I think the first 6 months of this financial year have seen a good bounce back in the retail sector. The inventory issues are behind, the high inventory issue with retailer. The customer sentiment is more positive. The interest rate cycles are softening up. And PDS has been, through his 60 offices in 22 countries, very well entrenched and present and engaged with the customers all across. So therefore, with this improving global demand, with my offerings into new line of activities of brands and sourcing as a service, we have witnessed a growth all across our offerings. We have grown close to 30% or so, and we believe the buoyancy in the later half of the year should also continue in Q3 and Q4 as well.
Then, there has been a strong momentum and you expect this to continue forward also. That's something you've said in your con call as well. There's one more thing that you, said in your con call, that factories in Bangladesh are fully booked for Q3 and Q4. I want to understand that has there been a significant impact of the Bangladesh crisis overall for the PDS Limited factories or how are things shaping up there?
See, when the crisis hit in the month of July and then again sometime in August, on the whole, there was a loss of about 4-5 days of production in our own factories and also the partner factories that we work with. But then subsequently, all factories have bounced back. And as we said in our con call, our factories are running full this quarter. They also sold out for Q4 as well. And in fact, we are booking orders for Q1. The absenteeism is back to 3-4%, which is a normal absenteeism rate. So situation is kind of pretty much back to normal. Having said that, we are keeping a close watch on situation in Bangladesh. And in fact, despite the disruption hitting on 2 occasions in July and August, PDS could post Q2 sales as the highest ever sales quarter in its own history. So therefore, I won't say that Bangladesh issue is totally behind us, but for now everything is running fully normal and factories running full. Not just our own factories, even the partner factories we work with. Situation is pretty much normal and under control.
Right. Mr. Jain, you said that the retail sector is now picking up, but overall, in the first half of FY25, the retail sector in India especially has not seen a good growth in terms of volumes as well as the overall performance in the retail sector has been muted. But what are the trends that you are observing, and overall, what do you expect? Are things supposed to change in Q2, not Q2, but second half of FY25? And if yes, how much of a positivity does this bring to PDS?
I think when you reflect on the first 6 months of this financial year and when you talked about relatively muted sales, you need to look at the last 1 or 2 years. There were kind of a pent-up demand post a COVID scenario, wherein there was a huge demand waiting for it to be tapped. Then one has also witnessed post-COVID change in the pattern from a very formal wear to more easy wear and casual wear. So the entire retail sector benefited from this pent-up demand. Somewhere in the first 6 months, I would say the situation is coming back to life normal, life as usual. So as a result, I don't think one should draw any permanent conclusion from any muted demand in the first 6 months. I guess this is now a steady state. From here onwards, one should see things picking up. In terms of emerging trends, I would say as the per capita income of an average Indian in the urban area is going up, the aspiration is growing up. So there is a gradual desire or shift towards more and more, I would say from a value segment to, inching closer to a luxury segment. But on one hand, while this is a phenomena across a few in the urban sector, given the mass population we have as a country on the whole, and given the flight from a tier 4 to tier 3 to tier 1 town. I think the value segment of the fashion, wherein the value here is not just a price point, also being able to cater to the fashion requirement of an average customer at a low price point. I guess that trend is here to stay, it is here to grow. I don't think anything that happened in the first 6 months should lead to any permanent conclusion that the retail demand in India in terms of fashion, is kind of muted. I think we should see good days ahead as well going forward.
All right, and so shall we expect that second half should definitely be better than the first half. But moving on to company-specific questions, EBITDA margins for Q2 for the company has significantly expanded. Now, I want to understand that, margins currently stand around 4.5%. Do you see an upside from here, or do you see that they'll be sustained within the same range?
So, we've been last couple of quarters investing through our P&L into North America market as a market from where we want to derive going forward a larger share of revenue. We believe towards the end of Q4 this year and beginning of next year that sales should start firing in terms of contribution to the overall revenue, and as a result, the benefit of that plus the Ted Baker business that we acquired 1 year back, I think that business is beginning to look very good for us. So contribution of that, which is a relatively high margin business. We've also invested in the last 2-3 quarters into brands. We've been able to spot opportunities to buy some brands at a very fair or a book value, and then able to channelize those brands, branded clothing, to my existing B2B relationship with my large retail customers. So the benefit of these brands, benefit of Ted Baker, benefit of US sales, and lastly, the sourcing as a service segment, wherein my order book in the first 6 months have actually grown 100% over the same period last year. This business for me gives me 20% PBT margin. So combination of these 3-4, I think should give me a trajectory that year over year in the next 3-4 years, one should see a 50 basis point expansion in the margin, operating margins.